when you feel like there's something that will come through, right?
The calm before the storm, isn't it?
Calm before the storm. Hormaz, don't start our note on a negative note. For now, it's all good on the markets. We're holding up and there's been a big recovery.
We'll enjoy it till it lasts.
We'll enjoy it while it lasts. But let's invite our guest on the show as well. We have Amit Gupta joining us from ICICI Securities, PM us to take some questions. Amit, it's a pleasure to have you on the show. You know, like we were talking about right now, it seems like everything is solid. We've seen this big rally come through. Do you think the market has run ahead of itself, has run ahead of the Fed as well? And do you think that, you know, when there's this much of just optimism that maybe it's time to be a little bit cautious, or do you think that this rally can really sustain itself?
See, broadly, if you see, I have seen the people, remaining cautious from 17,000 levels in the market. Because the reason being, if you see S&P 500, the US markets, they had actually taken out all the gains post-pandemic, so which was 3,500 level from where they fell. And again, they came back actually to that level when Nifty was near 17,000. But our markets pre-pandemic level was 12,400. So there was always a skepticism that what has happened to S&P, will that happen to the Nifty also? But actually, this is where the domestic inherent strength, which is definitely coming up for our index, whether it is the government balance sheet, which has actually improved significantly. If you see our current account deficit, which is now not 4.4%, which we saw in September 2022, rather it is close to 1% now. And I think whatever fiscal deficit the government had, because the budget is coming now, yes, it will be vote on account, but whatever fiscal deficit they had budgeted, we have reached only 45% of that actually in the month of November. So that shows that overall the government actually from the fiscal perspective, they are actually right on track. And this is clearly seen in our bond yields, which have remained subdued. Please remember, when the bond yields remain subdued, the equity markets also remain resilient. And this is what we are seeing in our Indian markets right now. Now, the other parameters like dollar, which is very critical, it has remained subdued this time, very, very surprisingly, despite the risk of sentiment. If you remember, in the month of Feb, we had 4 or 5 banks in US collapsing, but that time also the dollar index was 104. It was not 2022 level of 115. And this is where I think in the emerging markets, particularly India, where you have 6-7% of growth, you can expect some flows going forward. So I think some corrections can come, but the color of the market may not change what we are seeing currently.
Amit, I wanted to ask you about IT, and since we were mentioning about this as well just right now, the Fed pivot, that triggered that rally on Thursday and Friday, right? The IT index was up 3.5% on Thursday, 4.5% on Friday, but the demand scenario still, as per what brokerages are interacting with the company's CFOs, the demand scenario still appears to be as bad as it was earlier. So what do you think is the kind of estimates that the street is pricing in for these IT stocks?
So yes, you are right. See, one way there is a liquidity perspective, when interest rate seems to be topping out, US Fed is saying there may be cut. So just believing on that, the market is seeing some bounce in the technology stocks. But from the fundamental perspective, still, if you see going forward, there is a tepid demand. The follows, if you see in Q3, they are higher than the last year Q3. So that means you are going to see some impact on the revenues also going forward. We have not seen, they just take the case of Tech Mahindra. I mean, it was 17-18% of margin, now just hitting around 10-12%. So this is what impacting the companies. Yes, the lower movement of people from one company to another, or you can say the churning of the people, that has lowered, and this is one benefit to the IT companies. But the postponement of the orders is still there on the cards, and that's why the revenue growth that we are building up is not coming up in the technology companies. Now, from the market perspective, I think when the domestic earnings growth or the domestic economy is not doing well, suppose, then we look for IT, pharma, or the FMCG kind of stocks, because then we look at the outside world to put money. But when the domestic economy is doing good and you are seeing this kind of growth pertaining despite the global headwinds, then the money goes into the domestic stories mostly. And this is where, when we are building up our portfolios, we are focused more on the domestic themes, which are emerging themes, which have not participated in the last 15 years. And there are many such sectors which are coming out now, which are transitioning from value to growth. And this is where the maximum earnings growth in the market can be captured. And this is where the stock prices also follow that particular earnings growth.
Okay, that is on the IT pack. By the way, today also a lot of the stocks are seeing quite a rise from the lows of the day. So whether you look at a TechM, LTI, Mindtree, HCL Tech, all of them around 2% from the lows of the day. So you're definitely seeing a little bit more of a pop on the IT index. The index itself is up quite well and has seen a good move. So that is currently holding up well. Amit, another space I want to ask you about, which we have been, discussing at length, is the PSU sector, right? I mean, there's been a big move over there. It's been the star of this rally. But for someone who's missed out, do you think at these levels, it would still make sense to put in money? Do you think places like power, defense, railways, which have run up so much, still have more to go?
So if you look at PSUs, previously they used to move whenever the privatization kind of thing used to come. But now the government actually has fallen short of the disinvestment target also. And even then you are seeing this move in the PSU space. So yes, they were at distressed valuations. They are coming to fair valuations. There is a good order book position across the board. And we have seen that previously the major problem was the cash flows. And when we have spoken with the managements, the cash flows actually have improved. And the other thing, if you see the cost of borrowing. So cost of borrowing of PSUs have always remained lower, possibly 100 bips lower than the other players in the market. And this is coming to the benefit to them now when we look at from the operating leverage perspective. And this is where I think whether it is defense, now in defense particularly, you have seen HAL and Bharat Electronics performing before, right? But if you see the order book position of the companies, in these two companies, we have seen the market cap expansion, but in the other companies, we have not seen that. If you see HAL order book, it is around 82,000 crores. The market cap has reached to 1,70,000 crores because the future order book visibility is much, much higher. Bharat Electronics, if you see the order book around 61,000 crore, the market cap actually has expanded to 1,15,000 crores. But if you see Mazgaon Dock, if you see Bharat Dynamics, if you see BEML, their order book position is almost closer to the market cap. So take the case of BEML now, 10,000 crore order book, 10,000 crore market cap. And now they have got the order books, actually orders coming from Chennai Metro, Mumbai Metro, Patna Metro, Bangalore Metro. So we believe along with the defense, those orders can come up, but these metro orders are taking the 10,000 crore order book to 17,000 crore now. So 70% jump in the order book. So obviously the market cap expansion is likely to follow.
Right. All right, Amit, we'll leave it at that. Thank you so much for joining in and sharing your views on the markets and some themes to watch out for as well. Let's slip into a short break now. Up next, sugar stocks are having a sweet day today after the government reverses its decision to ban the use of juice for ethanol making. More on that on the other side. Stay tuned.